Samso here at the University Club in UWA, where we talk with CEOs and in the ASX about their stories and the journey. Today we've got Barry Cahill from Cyprium Metals, who is on his number 2 Coffee with Samso with us, talking about Nifty and copper mining. Barry, thank you for coming back and far away.
All right, thanks for having me back. It has been a little while since we had our last talk, and we just broke the news of our transaction. I think almost the exclusive Coffee with Samso. Been really busy, which is fantastic. We've taken control of the site at Nifty. We've started employing people, so we've got most of our senior management in place, which is fantastic. They're on the ground. We managed to secure, fortunately at the moment, because it's so busy, we managed to secure some drill rigs. First task on the first part of the drill rig was to do some sterilisation drilling at the, I'll get this right, at the western end of the project to give us some area to put in infrastructure, which successfully sterilised. We got footwall holes, so effectively sterilised that area, which is great. We then moved to do RC drilling around the outside of the pit, and what this drilling is intended for is when you have a look at the Nifty resource, if you can imagine, it's like a bowl that plunges down, and down at 400 metres is the old underground. The upper bit where there's oxide, transitional and a little bit of sulphide material hasn't been drilled out completely. So there's a resource there, an existing resource, that we could mine down on tomorrow. If we had the gear and the approvals and the money and all those sorts of things, we could mine down on that tomorrow and make a very, very profitable project. But when you look at that resource itself, there are gaps, what we call gaps in that resource, where there's no drill holes. And I think there's a misunderstanding amongst a few people in investing in the market that we're actually drilling out a resource. But we've got a resource there at 658,000 odd tonnes of copper metal. And what we're doing is at this upper end, and believe it or not, in a mine that's been going for 30 years, that at the upper end, it's not drilled out completely. We're filling in those gaps along the southern, the western wall. And we've done drilling out to the east where the deeper bits are, but higher up in the formation. So that's really exciting for us because it all lies in the pit optimisation with the current resource, and currently that material that we're drilling out goes out of the open pit as waste. So if we hit a bit of ore there, obviously, then we get revenue from it rather than it being a cost. So that's exciting for us. And obviously, as you're mining down in your pit, you don't want to hit unexpected ore, because then you have to change the way you mine. So that's what that drilling is focusing on. And in a release that we've just done recently, we described that we've actually increased the metres in that drilling because we found more of these gaps in the resource where potentially there's mineralisation. So that's really exciting. We've actually seen a little bit of mineralisation in some of the cuttings, but because the material's lower grade than, say, at our Nifty Well project, where the grade's high, you see the really good green rocks in the chips. This is a bit different because it's a lower grade, so you don't see those really good green chips. So we have to wait for the assays for that. The first bunch of assays is due to arrive into the lab this week, which will mean it's sort of 4 to 8 weeks before we see any results from that. So that's exciting. We've got another rig coming to site, RC rig, to do more of that work because the meter's increased. We also have a diamond drill rig coming to site to get us some metallurgical samples in the newer parts of the ore body rather than the retreat part. We've got a sonic drill rig turned up to take heap leach samples for metallurgical testing. And we've commenced metallurgical test work on that material. And again, the metallurgy of the heap leach and the SXEW at Nifty is well proven. Well proven, over 200,000 tonnes of copper metal has been produced from that process. So the metallurgy is not a risk. What we're doing is it hasn't been redone for 30 years. So we're looking at our own IP, which we talked about last time with Hollandair and Nifty Well. We're using our own IP to optimise the extraction. We started our first column and the results, quite frankly, have been fantastic. We're really happy with progress, but we've got to wait till that column proceeds a bit longer before we can release the results to the market. Then we've got the sonic drill rig samples from other parts of the heap leach, which we'll do a column on as well. And then we'll get this newer ore and we'll do some column test work as well. Remembering that the metallurgy on all of this has been done 30 years ago. It's this check and this optimisation. So any result we get is going to be better than what was done historically. And quite frankly, things have changed in 30 years in terms of knowledge of heap leach and chemistry and things like that. Really exciting because it does make it better. So again, we could start producing that copper plate basically tomorrow, or start the construction tomorrow. What we're doing is we're moving through the process of optimising and through the process of financing. The other things we've been doing is cleaning up the site. Been going really well. Been looking at refurbishment of the camp, which is going really well. We've got about 40 people on site now, of our own employees plus contractors. We've been doing some flora and fauna surveys in some newer areas where, truth be known, flora and fauna surveys have already been done, but we're doing check surveys because, again, they were done 10 or 20 years ago. So we're just doing check surveys there. Been talking with traditional owners, government about approvals, doing the engineering studies, looking at the refurbishment or building a new plant. At this stage, we're probably leaning to building a new plant, which would be more expensive, but in terms of operating costs and things like that, much cheaper. So in the longer term, much cheaper. And then we're doing some geotech work on new infrastructure sites and all those things you go to prepare your feasibility to get finance to start construction. And so far it's been going really, really well. As I say, considering supposed difficulties in the market with labour and things like that, we really haven't had a lot of problems. So that part of it's been really good. Really, really hard work, but so far we're still on schedule. Feasibility for September, finance before Christmas, construction through 2022, commissioning at the end of 2022, and then full production by January 23. So far on schedule for that. Losing a bit of time, so she's starting to tighten up a little bit, but other than that, we're going really well there. So yeah, really happy with progress.
I mean, from an investor point of view, a lot of guys out there, I mean, the update is basically status quo, right? It's just everything, as we mentioned when you first came in, everything's going so well, you're a bit worried that you've done something wrong. When you talk about chemistry, obviously, we know the resources there. We know that you can go dig it up, and so that's sort of a foregone conclusion. From the chemistry, you mentioned column and testing and things like that. Can you share with us what exactly that means for the layperson, how that process?
Yeah, no, certainly. Sorry, I do talk a bit technical because you live and breathe it. So what we do, so it's a heap leach retreat. So there's 17 million tonnes at about 0.5% copper, and we grab a sample, and in a heap leach it's hard to get a representative sample, but you grab a sample and you basically try and replicate what happens in the field. So you put it in basically a plastic tube, if you like, and you start off with a plastic tube about 2 metres high and about 8 inches in diameter. It takes about 200 kilos a sample. You crush, well, the sample's already crushed, but you make sure that it's crushed to the sizing that you need. Then the magic happens. Our metallurgist works his magic on it. He agglomerates it, he acid treats it, puts reagents in it, throws it into this column, and then we aerate and we irrigate, and basically the copper goes into solution and out it comes. And what you do is you basically sit there trying to replicate what happens in the field. So you measure all the parameters and you look at the recoveries, and you basically take the column through and try and get the maximum recovery in the quickest amount of time in the lab. And then those parameters are what you take out into the field. So what we've done initially is we've done a 2 metre high column, and
literally a column.
Yeah, but like basically a clear plastic pipe that's 2 metres high with 200 kilos in it. And then that's worked really, really well. It's still ongoing, but what we'll do now is we'll now go and do a 6 metre column. And 6 metres will be the stack height of the heap leach in the field, in the actual field when we actually build it. So we'll do a 6 metre column and we'll replicate the results. So you don't change any parameters, you just change the height. And the best way to deal with these things in the lab is to move through changing one parameter at a time to try and optimise it. So I go into a lab sometimes and I see setups with like 6 columns. And I I sort of laugh a bit because I always think people got too much money if they're doing 6 columns at once, because you need to actually get a column to work and then you need to move on to the next one, in my view. Other people might have a different view, but in my view, that's what you need to do. And for us, we've got a huge advantage over other people is because this process has already worked. We've got the history. So our starting point is what they did in the history, and then we change those things that we know will optimise it, and then we get a quicker result, and that's what's happened. We've got quite a quick result, which is what happened at Holland there as well. So with the 6 metre column, again, we'll do what we need to do and get a quick result. That works, then we'll start testing the other columns on different material with those parameters and just see what we can tweak, but it's all optimisation. So the idea is to actually hit our proof of concept study numbers, do all the data, and then move on to optimisation just to prove that all works. And to date, that's what it looks like quite easily. In fact, that it all, what we said would work, and now we're on to the optimisation stage. Usually takes a bit of time, costs a bit of money, but as I said, like we've done this before, so it's not too bad for us.
A lot of people don't realise heap leaching in your copper world is actually a common thing, right? It's and once you get it's all about permeability, solutions moving in, building the right height and weight and things like that, which once you've done one and you understand the rheology of the rock and stuff, it's pretty straightforward. Would that be a fair comment?
Yeah, it is straightforward, but you really do need to understand all of those parameters. And what you find is that there's a lot of experts on heap leach out there, and but a lot of them probably not in the field. And what we always find, and what the difficulty always is that you go into the lab and you have all those parameters, and then you go out into the field and the parameters aren't the same, because the people operating in the field don't actually understand why they're doing what they're doing, and so they don't copy the parameters that you're giving them. And the whole setup, startup and all that is quite complicated, and if you don't do it right and it doesn't work, you're talking about millions of tonnes of material. And anyone can stand there and say, oh, I can do heap leach. Well, go for it. We always say go for it. Go and do your heap leach, because we'll buy it off you cheap and we'll go and get the copper out. Because that's what invariably happens, is that people have a go at it. They can't do it because they're actually not in the field making sure it can happen. And then someone like us comes through and does a retreat. You see that right across Australia. There's a couple of retreats happening right now where people haven't got it right. And the Australian history in it is very poor, whereas in other countries they get it right. They control the parameters in the field, they do all the proper work, and that's why they make it work. Whereas here, for some reason, we just don't.
I think it's you see it all over in Asia, in Indonesia especially, and then you in South America, heap leaching is I wouldn't say it's a go-to, but it's like you said, they do it right and they know what they're doing. They've done it so often. But whereas I find that in Australia, when you mention the word heap leach, that the run-of-the-mill comment will say, oh, they can't get it into the mill, so they're doing a heap leach, and things like that. But look, going back to your initial thoughts when you mentioned that, you guys are doing sterilisation now, I guess, that's important. You don't want to put a plant on top of your, mother lode or something like that. But in terms of the drilling that's happening in Nifty, you talked about how you guys are now going after the parts where there hasn't been a lot of drilling from the resource, right? Yeah. Not sort of infilling the resource. How much of that is at Nifty? Because when I look at the Nifty map, it's the photo of the pit and everything, it's pretty well established. So how many of those gaps? Because I know I asked this question because a lot of projects do have these gaps, even though they look like they've been drilled like Swiss cheese. And you can, I use the example, I think it was Kundana, and they found like 900,000 ounces in the middle of Swiss cheese. So how much of that is in Nifty from what you guys are seeing?
The areas that we're looking at, we believe, are reasonably well constrained, but there's still large areas. So when you look at the bowl, if you like, there's a northern limb which is the pit's based on, and then there's this sort of southern limb. And then in between there's some sort of vertical faults that have mineralised as well. So there are sections of it that are not well tested. And part of that is because the recent history has been the chalcopyrite, which is the deeper stuff. This stuff is the oxide, the Super G, and the transitional. It's a lower grade, and it's not amenable to going through that big concentrator because it's oxide, so it doesn't float. So it's been ignored because it's not suitable for what the operation was at the time. We don't think it's vast, but remembering with copper price, at the moment, anything that you find is significant, particularly if it's part of a pre-strip, because you're finding ore in a pre-strip and a paste for a pre-strip. So for us, it's fantastic, and it is heap leach. So it goes one way to waste or one way to heap leach. We prefer it go to heap leach. Yeah, it's not hard. It's just directing the truck. So you may as well drill it and get it right. So we don't think it's a brand new ore body, but been wrong before. But there's just big gaps that need to be filled. So. And it's quite a substantial program. I mean, the program we're into at the moment on the southern side is 16,000 metres, which is a substantial program. So it is substantial gaps. Yeah. So,
I mean, those kind of size can make a big difference to your cash flow and your projection costs and potential profit down the line, right? Like you say, if you're paying for pre-strip, that's free money, I guess.
Yeah, and it adds to life because your plant's limited by its capacity. So any tonnes of copper that you add into the schedule, it's extra life. So the mine itself goes longer and longer. Or if you can get the material quicker, you can increase the size of your plant. So it is important. Those incremental tonnes are very, very important.
So in terms of the mine itself, but I want to touch on the regional exploration around Nifty, and then I guess talk about your other projects. But what's happening with the regional exploration around Nifty?
So there's two phases to that. So at Maroochydore, which is our other resource, we're heading down there. In fact, the guys are going for a reconnaissance run at the moment, and the diamond drill rig will go to Nifty. It'll drill some holes at Nifty, and then it goes down to Maroochydore to drill some holes at Maroochydore. Again, the diamond drill holes will be for met testing. So at Maroochydore, where there's 500,000 tonnes of copper, there is basically the metallurgy needs to be done, so we need to do, and it's not new metallurgical test work because there is test work being done, but this is coming up with a treatment method which is very different to what we're doing at Nifty. But again, apply our proprietary knowledge, do a column test, which we've just described, and get the recoveries coming, and then we're away. So that'll happen, the core will happen July, August, probably end up down in the lab by September, maybe start column testing October, November. And then I expect the results of that might be a bit slower, so probably not until the new year we see some results of that, because it's new material, so we'll take a bit more time with it. We don't have those easy lead-in parameters that we get from Nifty. Then IGO running the exploration joint venture, been hard at work, and we know they're hard at work because they've been staying in our camp. So they've been doing a series of soil samples through that ground with a new method. So we're waiting for results of that, and they've been really busy actually. They've gone really, really hard at it. And then shortly they've got to do some heritage clearances, and then they'll start drilling. Because the drilling season's basically from now to sort of October, November. So they'll go and drill some air core holes again around Maroochydore and on the boundary of Nifty, and we'll see what the results are there. So that they're putting some reasonable money into the ground on those projects. So we're sort of waiting for them to get some results, and then they'll come through. So pretty exciting, and cross our fingers that they're good at what they do and they hit something, because we're keen on it. And obviously we've still got the concentrator sitting there. So if they hit a different style of ore body that needs a concentrator, we've got the concentrator ready to go. So really makes the approval process and getting a mine going on in those leases a bit quicker, because we've already got this centralised milling facility. So yeah, keen on what they're doing. So that's around Patterson. And then Nifty Well and Murchison Project. Of course, we put the releases out about that. We basically did our diamond drill holes to look at the geophysics. We've done the geophysics, but of course then we hit a couple of those good runs of copper, and then we hit the silver in the breccia, which is very, very surprising. And again, with Nifty Well, it's not our focus, but we're just ticking it along. So the RC rig or the diamond rig, somewhere in between Nifty and Maroochydore, will slide in and do a couple of holes in at Nifty Well. Obviously, we've got expenditure commitments to meet, but also we want to keep kicking that along, and it's really shaping up as a really good project. So we're not going to let it stagnate, and we're really bullish about. We've got quite a number of targets within that mineralised envelope that we can pursue, so we're just going to keep ticking away at that. So really bullish on the Nifty Well. It's not the sleeper anymore, I think. Yeah, it's really standing up.
I mean, the length of the intercept you're getting, and with mineralisation, and I think it's far from being a sleeper project. And obviously, Nifty is a step above, because you're going to be producing copper plates and things like that. But from any point of view on a project, Nifty Well, it's actually very good.
Yep. No, and if you're a small explorer, it'll be your number one project.
Yeah.
No worries at all. Yeah. We just got stuff there to follow up. If we ticked along at a slower pace, we could keep following that stuff up for years. It's that big. The thing's that big.
From your point of view, like you mentioned that the silver in the breccia and things. From your point of view, how significant is that for most people out there wouldn't probably not see things are happening, but how significant is that silver?
Bar the fact that the grade was amazing, we don't know. That's the problem. It's a conundrum. It looks like it's a later event. So it looks like it's come through later. There's not much displacement in the breccia, and obviously there's a fluid rung up that's really silver rich in the middle of a big copper ore body, basically, or copper mineralisation. Yeah. So yeah, we actually don't know, and that's why we've got to go back and just take our time and put a few holes in and just try and understand what's going on there. It's amazing what's happening there, particularly seeing it's been around for quite a while. It's not like it's a new project. So when we look at the results of what we've got so far, we've ended up with the green rock on top, which suits our Hollandia resource, so we could start a mine there on that. Then we've got those big broad zones of that copper mineralisation, and then in amongst that there's this silver thing doing something. And then down to the south, which a lot of people don't know, is there's actually a zinc anomaly down to the south that we actually don't talk about either. So and then Stark alongside. So you've got Nifty Well, which is this big broad thing. Then alongside it, you've got this narrower Stark thing where we're getting good copper intersects. And then down to the south, you're getting the zinc. In the middle of Nifty Well, surprisingly, there's this silver breccia. It's an amazing location. As I said, it would be number one ranked for an explorer. For us as a resource developer, it's sort of intriguing, and we really want to get into it, but our main focus is Nifty, so we've just got to keep focusing on Nifty. But we've got our resource development guys just ticking that one and ticking Maroochydore along, and then of course IGO doing that Patterson work. So we're really we've got all these arrows in our quiver, but really just trying to focus on that production profile for Nifty. So really exciting times for us. And we have been cautious because it's very easy to get lost. When you get something really exciting like Nifty Well and that, you can get lost in it. We don't need to do that. We just need to take our time, be patient, get Nifty going, produce copper plate over the next year or so, and then those things will just tack along. We've got a team that's working on them. They just tack along. So it's
a good corporate market. You can spin it out.
That's the second time that's been suggested. Yeah, spin it out, get value for it.
You heard it here on Coffee Samso?
Yeah, yeah. No, never say never, but no, I wouldn't think so at this stage. But I actually think it's going to be as big as Maroochydore because the system's quite big. So I think it's going to be as big as Maroochydore, and with the copper price like it is, again, like you talk to people who know better than I will about copper, and they all say, $3 a pound copper is history, it's always going to be 4 or better and all that sort of stuff. I can't say I'm a huge believer, but more strength to their statements, because things like Nifty Well at $4, $5 a pound copper fly, they're absolutely money makers. And it's amazing, we've now probably got 3 of them. So we've got Nifty, which was good at $3 a pound. Imagine what it's like at $4 and $5 a pound. We've got Maroochydore, where we think we can crack the metallurgy, and then it'll be the same as Nifty. It'll be good at $3 a pound, let alone anything higher. And then this Nifty Well, the way that's coming, will be the same. Remembering we're developers and producers. That's really what we're focused on. Boring, as we say. Nifty's boring because we're just plodding through the motions of doing what we need to do, so that's boring, but ultimately that's what we're here to do. We're here to produce copper plate, make money for shareholders, and make money for our stakeholders. So really that's what we're really focused on.
It's interesting because in 2019 or somewhere abouts there, I wrote an article talking about whether this shortage of metals is a mirage or not, and I had a graph in there that showed the copper price sort of going up, but then it sort of was heading down, and then obviously, you know, as we look back, it did keep heading down until March, the last week of March, and it just straight up and hasn't stopped, right? So,
yeah, it's amazing.
So I keep saying, you know, maybe this run is people the realization of a supply issue for copper was said, oh, you know, she'll be right, and then suddenly, oh, it's not quite right, you know, and recently the outgoing Glencore CEO probably gave you guys a good boost in saying that copper price need to be at this price and how much it's going to be at 2050, I think they're anticipating 60 million tonnes used per year or something like that, as opposed to 30 that's now, and the supply won't catch up, so that's a good thing.
No, it is good. So when Nifty started, copper was at about 50 cents a pound, and Western Mining were mining 3 to 5% copper. And you know, now we're looking at basically 1% copper ore bodies, and they're making lots and lots of money. So it just goes to show how much the market has changed in even that 30 years. But as I said, I don't pretend to be a market analyst. You know I can produce copper cathode at the lowest price possible with the IP that we've got, buying the right projects, and we get excited about building projects. That's what excites us. So we really are in the box seat for what we love doing. So yeah, we're not. I try not to pay too much attention, because I always think, you know, when you talk about $4 or $5 a pound copper, you get overexcited about something that hasn't happened yet. So we've just got to focus on producing copper plate. Because when we produce copper plate, then we can get excited about the price.
Well, the key is that, you know, what you guys are saying is that at today's price, you're going to be making money.
Yeah, good money.
So even if it stays at today's price, you know, don't think about the $4, $5, you know, $6, whatever it may be. You're making good money. You know, I keep telling people, gold today, if you're making gold today, you are making good money. You don't need it to go to 3,000 US at today's price. You're making good money.
Yeah, yep, make the money while you can. So yeah, and that's one of the things that we keep saying to ourselves and focusing on as a business, and our strategy is we want to plate copper as quickly as possible. So even though we've got all these sexy things in the back pocket with Nifty Well and Maroochydore and even Hollandair in that area, the focus still is on Nifty and getting Nifty going and producing copper plate as quickly as possible. And we're just steaming along that path at the moment. We're really going pretty well. So.
Okay, so going forward, you know, I mean, we've touched on a heap of stuff, and you probably mentioned already what's going to happen in the next 12 to 18 months. You know, in a quick summary, what's the news flow for people that's out there?
Well, the immediate news flow is we've still got a few assays to come out of the Nifty Well. And then we've got the assays to come out of the drilling that we're currently doing at Nifty, as well as a few progress reports. We've got the results of the metallurgical test work, which tells us it's going pretty well. So that I think that will be shortly, within the next 2 to 4 weeks. And then all the stuff that goes along with, you know, the finishing the drilling, finalising the big resource, the optimisation, what the project looks like, the cost of, say, the new plant, the overall capital cost, and then the finance, because we're going to go and finance it. So the finance and those, so again, some boring project work, and hopefully in between all of that, a few holes in Maroochydore and a few holes in Nifty Well that look really exciting. But if they don't, then no skin off our nose, because the main game's Nifty, and we're just kicking everything along at a reasonable rate. We're not going over the top, we're not going slow, we're just kicking along at a reasonable rate. So a fair bit of news flow, but probably a lot of it in the boring category, unfortunately, not the sexy category.
That's a double-edged sword, right? It's good and it's bad, right? It's good, it's boring, because that means you're actually going to be a miner in 12 months or so.
Yeah. It's like the sterilisation drilling. Like, you sit there looking at the sterilisation drilling, the operator's thinking, I don't want to hit anything. Yeah. But the investor's thinking, I hope I hit everything. But then as an operator, I think, if I hit a huge ore body, then it's going to delay my program. I'm not going to be able to build where I want. I'm going to have to delay this and delay that. So yeah, it is. It's really a double-edged sword. But yeah, because I'm a shareholder too, so I want the appeal as well. I want the big intersections as well. But ultimately, to survive as a business, we don't want to keep coming back to the market. We want to make cash. And then we'll self-fund ourselves on all those other sexy things that we've got. But the key is, first up, make cash, make money, be self-sustaining, don't have to come back to the market, not go for 20 years visiting the market every 6 months, and just be self-sustaining and go and build those other projects and any others we get our hands on in the meantime, because we're still looking. We're still active, looking at opportunities, but copper price has not been helpful on the value of projects at the moment. So, but we're still active, we're still looking, so we'll find some other projects as well to add value.
Okay. Look, again, at this part of the show, I'll encourage you guys to contact Barry, because he's got nothing else better to do. He will answer all your questions. Because look, Cyprium is unique in the sense that in Australia, I don't know too many people in your position in terms of the company, what you guys are doing, and it's look, at 27 cents, it's not too far off where we started the conversation. So from an investor point of view, it's not too bad, right? 7 cent premium from, I think, 20 cents when we had that conversation. Yep. So it's probably good, and like I said, reach out to Barry, because he needs more work to do. But look, Barry, always a pleasure to talk to you. I love this kind of stories. I think you've got you're on the road to mining, and you've got some good leads and projects. And I'm pretty sure all the projects that you've got there, it's going to develop into a prize eventually. May get masked in all the smoke at the moment, but anyway, thank you, and I appreciate you coming.
No, thanks for having me. It's been great.